Good news, NIO is up by 5%, almost currently in the session. Who knows where it's ending up? Anyways, could this have something to do with the NIO JAC agreement has been renewed right now? Let's dive into it, but please give this video a quick like and share it in your favorite social media channels. Here we are looking at the NIO chart, and as you can see right now we are trading above 35 US dollars, and we had basically a breakout from this downward trend here. We previously had support from the levels here that we've seen before. NIO last week closed slightly above those levels, and now had this kind of explosive outbreak here today, basically after the stock got enough steam of breaking through this downward trend line here. Now with that, I think we could actually go to around 38 US dollar first before we possibly get another rejection and going down again. And now the question is, of course, what has caused this sudden spike today? And well, in fact, we do have some news that NIO announced the renewal of this joint manufacturing agreement with JAC. But actually, we do have daily news around NIO, right? And mostly actually positive in the last weeks and days. So is this significant enough in order to kind of let the share price explode? Well, indeed, it is important news, because in this annual filing, the 20F of 2020, NIO has outlined the manufacturing and collaboration with partners is a subject to risk. So the first agreement started in 2018, and there was the possibility that they would be unable to enter into a new agreement or extend the existing agreement with JAC. Now for me personally, I never really worried about that, because following NIO closely and looking at all of the news around NIO and JAC going hand in hand together in the last couple of weeks, even if it's just letter of intents or about building the new NIO Park and so on, it was actually quite obvious that there is not a split up happening between the two. But you need to be aware that, for instance, institutions and funds that are investing in companies, they cannot just make their mind up like this. They really have to look at formal disclosures at some points, for instance, in order to manage their risk. And as it's here a very explicit risk in the annual filing that they knew would be happening in May 2021, either renewed or not happening, that actually may face some legal risks in banks that want to decide whether or not they want to continue and invest in NIO or not. And interestingly, we also see some details in this news release, although not as much as I would have liked to see personally. So for one, JAC will expand the annual production capacity to 240,000 units. And that once again is kind of in line. Previously, I've done videos about that. The current JAC NIO plant has a capacity of up to 300,000 cars. Well, maybe that's not worth for the institutional investors if just a YouTuber is talking about it. But now these investors have it formally in the news here that JAC is actually providing the capacity to grow. And I think this capacity is just an ongoing scaling of the capacities. So for now, my best guess is that NIO has actually arrived at around 120,000 annual capacity for this year. So due to the chip shortage, they may currently not use all of this capacity for now. But I think they're on a good way to max out this capacity by the end of the year in terms of production. And I think going into next year with the 240,000, that once again speaks for another doubling in the capacity. And that still isn't the end of the current plant only, but that's what can be used for this year and next year until NIO Park, which will have even more additional capacity ready, will be finished as well. And I think NIO might be actually on track of building this new capacity also quite fast. Last week I just posted first footage of what currently seems to be the first groundwork going on with NIO Park. And personally, I expect lots of progress to be seen already this year, and within, let's say 12 to 18 months, that we actually see the first buildings built up and standing, and the first resources that NIO can actually tap in for actually increasing the capacity even further. Now back to this announcement of the renewal of the arrangement. The interesting thing is obviously also in the details. As previously also the case, JAC will continue to do the manufacturing and NIO will take charge of the vehicle development, engineering, supply chain management, manufacturing techniques and so on. JAC will be responsible for the parts assembly and operation management. And this partnership has been highly successful so far. We see that the cars are really good in quality, and at the same time NIO has increased the margins, the vehicle margins, but also the gross margins significantly during the last couple of quarters. So the split between the two parties is working really well, and NIO is basically kind of operating the entire factory, has all of the teams on the ground, while JAC is delivering their know-how in quality and operational excellence in putting the parts together. So now regarding the fee arrangements, it seems like most of the cost will actually be payable monthly. So for both of the manufacturing of the cars, the vehicle production and processing fees, and they can be adjusted actually also on an annual level. And this is the main sentence for me in this new arrangement, that NIO will be allowed to benefit from the economies of scale and manufacturing efficiency improvements in the future. And the translation, of course, is the more cars being built, if NIO manages to scale up and sell more, then they will also profit from better margins and having less unit economics costs that they need to pay to JAC. It seems like these are pretty preferential terms here for NIO, although I have to say I would love to see them more explicit in a way, so maybe we see it more disclosed in the next annual filings or something like that. But for now, of course, we don't know the explicit details of this arrangement, but we will see that in the coming quarters whether or not the vehicle margin improves even further. Although we have to say that Lee Bin, he mentioned in the last earnings call that he thinks that the current vehicle margin is actually quite healthy, and so we should expect less increases of the margins in the future, because NIO had already, of course, a really high pace in the improvement of those vehicle margins in the last couple of quarters. So back to the chart, can this really be the reason why NIO is breaking out today? I think yes, it can be the catalyst due to the fact that I think that this news is kind of important for the institutional shareholders. But on the other hand, we also see clearly this technical break here. So this could also be fostered by the algorithms that are now buying in as soon as we went beyond this downward trend here. So that's an important line. And what I think also adds to this larger spike today is actually what I mentioned in my video on the weekend, which was actually around the currency, the cryptocurrencies and crypto markets and the sell-off there. Which I think is actually a bullish sign for the growth stocks. I mentioned that before, and that I see kind of a reversal in this inflation trend. And that might be too early to say that this is really the case, but we saw a steep sell-off actually today in the 10-year US government bonds. They're now recovering a little bit, but maybe they will stay below this trend line here as well, because there are actually some signs that, for instance, in commodity prices and also in the sell-off in the cryptocurrencies, that maybe the inflation fears have been overdone, and that's obviously bullish for growth stocks. So all in all, I think it's mainly due to the macroeconomics, the fact that today growth stocks are doing fine, the fact that we have a technical pattern here that actually fosters a breakout. And then, surely this new agreement could be a strong catalyst, because it takes out some risk for the institutional investors. So this is why for now, I think if we get a confirmation on this growth stock trend, that I think NIO could actually retest the $38. If we go beyond that, that would be really bullish. Other than that, as long as this rotation persists and inflation fear is around, NIO could certainly once again test the $34. But for now, let's just be happy that NIO is finally green again. I think it actually has some catch up to do. If you look here at the NIO chart, it is down against, for instance, Tesla, Li Auto and Xpeng, which are up and have recovered much faster than NIO so far, about which I just made a Patreon post this morning because I think it's a wrong signal. And I actually think that investors are on the wrong track here, and NIO could surprise here in the future. But that's up for another video. Thank you guys for watching, and see you in the next one.